Hello and welcome to the Wealth and Wisdom Show. I'm James DeGiorgia. Joining us today is Stephen Katzman, an accomplished securities litigator from Boca Raton, and Richard Liebman, a tax attorney formerly with the Chief Counsel's Office of the Internal Revenue Service. They're here to discuss the tax implications of the $50 billion Madoff scandal and other scandals. Welcome to both of you to the show today. We're fast approaching April 15th. People that have been caught up in the Madoff scandal or the numerous other financial scandals are now looking at their income taxes. As a tax attorney, what's the best way to approach your 2008 taxes if you fall within a group where you've been obviously defrauded out of your money or you've taken substantial losses as a result of these scandals?
Right this moment, the best position that we're recommending is to get yourself an extension on your tax return for April 15th. I need to give you several minutes of background for that simple answer.
Please do. Please do.
We talked about in the last program when we focused on taxes. We talked about how most people are going to benefit the quickest if they have deductions in the year 2008. If they claim them, because that was the year the theft loss was discovered. And that is the year that generally you would take the theft loss deduction. Then you'd be able to carry it back 3 years. That could lead to refunds of cash. And if you haven't used up your entire theft loss, you can carry it forward for 20 years and not pay tax on cash as long as you've got loss to offset it. Claiming the theft loss in 2008 is a very important step because as I said, it gives you the quickest shot at benefits, and it's also kind of your best chance from the legal standards that you're governed by. So you have to be very careful about how you're handling 2008. And we don't think there's enough facts yet for you to take a studied position about the theft loss that will best benefit you for 2008. So that's why we're saying sit tight until we learn more. I need to really fill in a little more background information.
Please,
and kind of make just make a little bit of an announcement, because for those who've been following the Bernard Madoff tax loss website, I have been started a series of reports on the tax situation. The second report, which is a lot of what we're discussing tonight, is what will be coming out on the Bernard Madoff tax loss website by the end of this week. And what we're going to look at in depth in that second report is the standard for taking your loss in 2008, which is a key phrase that you don't believe you have you don't believe you have a reasonable prospect of recovery as to any particular amount, and the facts as we know it at the end of the year support that belief. That's where you want to be. And I think that when we have more facts, it's going to be a lot easier to paint that picture. If one does have a reasonable prospect of a recovery, such as Steve talked about SIPC, and let's say SIPC is going to pay a certain amount. As to that amount that you don't have a reasonable prospect of recovery, you're going to have to wait to get that loss. You're going to have to wait until SIPC finally pays out and see exactly how much. If you thought you were going to get $500 from SIPC, you're not going to be able to take that $500 loss in 2008.
And for those who are just, tuning in, SIPC stands for the Securities Insurance Protection Corporation. And when you talk about $500,000, you're talking about $100,000 in cash and $400,000 in securities is the limit.
Correct. Taking several steps to put your house in order so that you know where to go in 2008.
So the first place would start is to file for an extension, pay your taxes.
Correct.
But keep your options open by doing so that you can file back all the way back to 2005's taxes.
Correct.
If you had gains that you can offset by the loss.
Yes. Now, there's some other things in that same area of getting extensions or being cognizant of the statute of limitations. There's a lot of people that we're finding that paid estate taxes on Madoff inheritances. You may be able to recover those estate taxes.
So somebody who inherited an investment in the Madoff fund,
correct,
may be in a situation where they have to look at the estate tax that they're going to pay on that.
No, that
or
they
that
had already paid
for the 3 years prior.
Correct, and they may want to go back and amend that estate tax return. So they have to be careful of the statute of limitations. And at least in that regard, there are certain procedures that people can follow to do what are called protective returns, where if you believe the statute of limitations is going to run out on using your loss, you can go ahead and file a protective return to at least keep the statute open. But you've got to be careful, and you've got to do it the right way.
Now, one of the questions I'm sure you've heard from people caught up in this is, why do I need a tax lawyer, to help me on this? Why don't I just go through my CPA? My CPA says he can handle it.
Well, I think there's some very fine distinctions and fine points in the law that are going to make a big difference. Like, for example, I'm saying that what one has to do as kind of a step-by-step approach to reviewing this is to, first you have to get all your records in order. Right? Then you need to make a basis calculation. That's going to tell you just how much tax loss you have. Then you've got to really look at every source of recovery. Steve went through several of them. Some are good, some are bad. Each one of those possible sources of recovery that you decide to act on or not act on may present limitations just how much you'll be able to take as a tax deduction in the year 2008. Mm-hmm. As I said in a previous show, let's say someone has a $500,000 legitimate tax loss, and let's say that under SIPC a claim could be made that they're going to get all $500,000 back. Let's say the realities of it, when you really look at it and tear it apart, is they're going to get $100,000 back. Now, if they're not handling that SIPC claim the right way, the IRS is going to say, well, you thought you had a prospect of recovery of $500,000. We're not going to let you take that loss in 2008 because it may not have been a loss. And then what if SIPC takes a year or two? You're 2 years late in claiming that. Right. Now, there's going to be almost in every source of recovery, there's going to be fine lines, and there's going to be many options that come up. Options between taking the estate tax deduction, if that's your situation, versus the income tax deduction. Where to take the income tax deduction. I think an attorney is going to working with an accountant. I mean, this doesn't work. The team that does the tax planning is an accountant, a tax lawyer, and a litigation lawyer.
My view is that the tax lawyer should actually be the one who's the quarterback here. So rather than having the litigator driving the engine, filing lawsuits and arbitration claims, if that lawyer, after careful assessment, is able to report to the tax lawyer that a certain percentage, let's say 75 or 80% of the loss, is going to be non-recoverable, or it is not going to be cost-effective to pursue those avenues of recovery, that opinion gets utilized by the tax lawyer and the accountant in filing the tax returns.